In this section, what I'm going to do is teach you the 7-step process I use when trading stock options. So this is essentially my foundation. So if you're building a house, you pour the concrete down for the foundation and then you build a house over top of the foundation. So these 7 steps are the foundation of the process I use to trade stock options. Now, here are the foundational 7 steps I follow. Starts with fundamental analysis, starts with creating a watch list, starts with technical analysis, potential trades, follow through, exit strategy, and money management. Now, I'll break all these down for you in just a second, but these 7 steps I go through also can be broken down into 3 questions. And the first question will be what to trade, and fundamental analysis and creating a stock watch list falls under that category. Second question will be when to trade. And so you're going to use technical analysis. You're going to find some potential trades, and then you're going to craft something called follow through. And then the third question is, well, how do you manage risk and profits? And that covers, extra strategies and money management strategies. So, that's really it. If you talk to any successful option trader, swing trader, or a person who trades trends, they will tell you that, it all boils down to those 3 questions. Now, I'm not implying that option trading is easy, because it's not. They're actually, from what I've seen, more crash and burn option trading stories than there are rags of riches. And I really want you to consider that point I just made. There are more crash and burn stories than there are success stories. Now, it's up to you which side of the fence you want to be on, but just remember that. One of the biggest things I see is that a lot of people, if they aren't making money, they think they need a new strategy or a technique. And, I say, well, that's one of the biggest misconceptions, because if you aren't making money, it's not based on a strategy or technique. It's based on, something in option basics, because everything ties together. It all works like a car. And so if I was to show you in this program the how-to without showing you the why, you wouldn't succeed, because you need to know how to place trades, but you also need to understand where it all fits within the grand scheme of option trading. Now, in this next portion, what I'm going to do is actually break down each of these 7 steps, so that way you can see how it plays out in real life. Now, fundamental analysis is a big fancy word for meaning that you're essentially going to look at like the inner workings of a company. You're going to see how profitable a company is, how much debt they have, different things like that. So when you hear analysts or, people who work for mutual funds companies, that's what they do. They do a lot of fundamental analysis, looking at the inner workings of a company. Now, that's generally the first step in the process of trading stock options. And it's going to start here. So this will be like the first part of your foundation, building your foundation to a successful option trading business. Because options are derivatives, you can't find good trades unless you have good quality stocks. It's like 5,000 plus stocks on the market. So you're going to sift through all of them, and then you find like the best. And then once you find the best, what you do is you create what they call a stock watch list. Now, stock watch list is just a small snippet of those 5,000 stocks. So out of those 5,000 stocks, you might pull out, I don't know, maybe 50 to 100. So you're really only pulling out the best of the best. You're narrowing down that list. And then once what we teach is once you get that list, then you do something called technical analysis. Now, technical analysis is, where you're essentially looking at a stock chart. So if I'm studying the stock chart right here, this is what they will call technical analysis. And so I'll show you some examples of that here in a second. And so what I'm going to teach you to do is like whatever stocks that look okay, according to your technical analysis routine, then you're going to place on a list. Now, that list is what they call a stock watch list. All right. So that's the list you're going to review each night, each week, each month. It depends on your trading style. That's what you're going to look at for potential trades. Only the stocks that's on your stock watch list. So now we're going to cover when do you actually trade. So if you're looking at this process, we went through what to trade already. We found a few stocks we wanted to trade. We did a little bit of fundamental analysis. We created a stock watch list, and then we figured out, okay, when do we actually trade these stocks? And that's where you use something called technical analysis. Now, again, technical analysis is where you're just studying a stock chart. You're looking for certain price patterns, or you're looking for signals of when to get in. All right, so this will be an example. And this is actually, people trade this way. I don't particularly, but people will draw something as simple as a trend line. And so if you've, wrong trend line. So if you've gone through the basic course, a trend line, preferably you want to touch it in at least 3 points. And so there are some people who trade trend lines. So a stock will stay within a certain range. And you can see here, it held up under this trend line. But when prices broke through this trend line, it signals you that, okay, this downward price change may be this price movement, this downward trend, it may be changing. And so you can pay attention to that. And if prices continue going back up, that's your signal that, okay, prices have in fact changed trends. So then you can draw another trend line on the upward move here. And so you would, all right, sorry, it's not an upward move. Actually, I should be drawing it up underneath. All right, so then you can just draw a trend line up underneath here, trying to make sure you can touch as many points as you can. It's not always an exact science. Everybody's going to draw the trend lines a little differently, but mainly you're looking for a best fit line so you can kind of get a gauge on the price movement. And so this one right here lets you know that, okay, well, prices broke through this trend line here, and what happened after it? They went down. So there are some people who trade purely like that. They're using technical analysis to let them know when to trade. So if that works for your personality and that's your style of trading, then fine, you can do that. Well, I'm going to show you how to, in this training, I'm going to show you how to add a couple of more indicators on here as sort of visual aids. We will not, and I repeat, we will not treat the technical indicators we use as the law. The law, or the holy grail of trading that people are searching for, is price and volume. Because I don't care what technical indicator you put on this chart, nothing else matters except price and volume. So man, you want to be really in tune with price and volume and start paying attention to what they're doing. And that's why I said some people just use a simple trend line approach and not technical indicators, because this factors in what prices are actually doing. And you can see that even though the stock market has a zigzag motion, it has some kind of rhythm to it. And you could use something as simple as a trend line and just really trade through these little short mini trends right here and profit handsomely. And so technical analysis in this process is used almost twice. Once when we're trying to create our stock watch list, you do that naked chart analysis. You pull up the chart, you say, okay, do I like the 1 year chart on it? And in the beginning, you might not know the answer to that question, but mainly, what I always tell people is pretend like you held that stock in your portfolio for your family's wealth building. Just looking at it, this one has gone up. Has a lot of zigzag, but it's gone up. Would you be okay with making money? If the answer is yes, put it in your stock watch list. All right. The second way we use technical analysis is we're looking for certain price patterns, and what I just showed you here about getting in and out of trades. And so this is what we call trend analysis, stock trend analysis. And so I'm a trend trader, position trader, end of day trader. Those are all the same names of what I do. Mainly I trade trends. I get in a stock, I figure out which way it's trading or trending, and then I get in. So right now the 23-day moving average is trending up. And so I would be buying call options. And so to keep things easy, think of a trend like a flowing river and you're swimming in that river. Well, it's much easier to swim with the tide than against it. If you've ever tried to swim against a strong river tide, it's possible, but it's difficult. So what we say is, don't fight the tide. Just figure out which way the stock is going and get in alignment with it. Don't argue with it. The stock market or the stock doesn't care what you think. Trade what you see, not what you think you're going to see. And aside from that, on a more practical note, you'll make more money. If you get in alignment with what the stock is already doing, you will make more money. Your chances of making a profit are much, much greater. Now, will you lose money sometimes? Yep. And it's what I call transitions. All right, coming back here to the 1 year chart here. When we drew that trend line and we saw that, okay, prices were headed down and they jumped up through that trend line, they started going up. That's a transition period. You're going to lose money most likely during that period unless you're already out your trade. Why? It's because you're in a downward move here. You're probably trading put options. And by the time you figure out and you notice that, okay, well, the downward trend is ending, let me get out, you're going to lose a little bit of money. So, keep that in mind. But overall, if you get in and get in alignment with the trend of the stock, you will make more money. And this is what I call stock trend analysis. And so before we move on to the section of potential trades, let me do a quick recap. All right. So first, you're going to look at the chart and you're going to determine, is the price up or down? So looking at this chart, we can clearly see that the price is up. We can just look at the prices themselves, with nothing else on the chart. We can see that they're going up. You don't need any technical indicators. Again, we use them as visual aids just to help us a little bit. All right, now you can look at this and you say, okay, well, the 23-day moving average is going up, so prices go up. So step one, evaluate the chart, see its direction is heading, up or down. If it's up, you buy call options. If it's trending down, you buy put options. If it's going sideways, you do nothing. You sit on your hands. USO will probably be a good example. I think USO looks like it's going to be trending sideways here for a little bit. I might have to come up to a 2-year chart. Well, maybe USO wasn't an example, a good example. I'm trying to give you a good example of trading sideways. All right, so this is a pretty long sideways move right here. But in between that sideways move, you did have a lot of up and down. So you might have got caught in that. But if let's drill down here and let's see what they look like a little bit more. Okay, well, for the most part, you can kind of see the 23-day moving average was going down, but it kind of looked like it was flattening out. Now, in real time, this is going to be hard. I will, because I've traded through times like this. It's easy looking at it after the fact, but when it's happening in real time, you kind of doubt yourself. It kind of takes a while to see what's really going on. But all I can tell you is if this is a lot of up and down, shaking and, up and down movement right here. So if you were in trades, you might get in, you might get out, you might get in, you might get out. At that point, okay, the stock is acting crazy. Let me take a break and get back on the sidelines until it sorts itself out and becomes more predictable. So you could have sat on the sidelines for a little bit and maybe until this upward move here. Again, this is going to be hard to determine in real time, but in the long haul, you're going to get some, losses here and there. You're not always going to get everything perfect, but for the most part, you should come away with a profit at the end of the year. So again, we first look at the chart. We want to see which direction the stock is going. If it's up, we buy call options. If it's down, we buy put options. And then we look for entry and exits. So that's when to trade using technical analysis. Next thing about when to trade is potential trades. Let's say you found a stock. It looks promising. You've done all your analysis. SPY, the one we're just looking at, we're like, okay, it's still going up. And I think I want to enter that stock. And so what do? Well, this is where you're going to actually look over the option chain and pre-select the options that you're going to buy or sell. And so let's pull up the option chain here of SPY. Now, as a beginner, the rule of thumb I teach for beginners is to pick the at the money option. You're buying options. You want to buy options. You want to give yourself plenty of time. It really depends on how long you plan on staying in this trade. All right. Let's say you plan on staying in the trade 6 months. And, it depends on the market environment. Right now, if we pull up the chart of the SPY, we can see that's been trending up pretty nicely for a long time. This is not likely to continue because stocks have zigzag motion. So it's going to come back down eventually and then, maybe go back up or keep going back down. So I say give yourself some time. We have a 30-day rule. If you went through the basic course, you know that when you're buying options, you definitely want to, get them off your hands in the last 30 days. So you might come out here to 63 days. You might come out here to 91 days, 126. It really depends on your strategy and how long you plan on staying in the stock. As a general rule of thumb, I tell people pick that the money option and buy yourself at least 2 to 3 months of time. Again, that's just a general rule of thumb. It's not set in stone. The more experience you get, the more advanced you get, you can fluctuate. You can adjust that. You can come further out here to 300 days if you want. It's up to you. But as a general rule of thumb for beginners, I say pick that the money option and go out at least, 2 to 3 months. And so we might come out here to April, but with the 30-day rule, we know we're going to close this one out in 33 days. So that's fine. Let's just find April. And so we come here, the at the money option is the one closest to where the stock is trading at. Stock is trading at $152. So this $152 option right here is the at the money option. And so we would, look for that and say, okay, tomorrow when the market opens, that's the one we're going to buy. But that's where follow through rules come into play. So that's your potential trade. You found the option that you want to buy, but you also need follow through rules. Now, follow through is if the day you want to place your trades, it's a set of rules you follow. And the set of rules are essentially like, if stock A does B, then I'm going to do C. So in this case, if we're going to buy a call option here, our next day follow through rules might be like, okay, well, when I go to place this trade, I want to make sure that SPY is still trading up in price when I want to make it. Today it closed downward. So do I really want to buy a call option when the stock is down? No, I don't. Beginners do. They're like, well, it's down. I can get the option really cheap. And I'm like, okay, but the stock, according to its price movement, is telling you that it's headed down. How do you know this downward movement won't be something like this, where it's going to continue going down like 5 days in a row? In that case, you're going to lose money. So what I like to see is follow through. I like to see the stock continuing to go in the direction I want it to go in this case, up. So again, if stock A does B, then I'm going to do C. So in this case, if SPY goes up in price, which is B, then I'm going to do C. I'm going to buy my call option. So that's it. That's all follow through rules are. Again, is any of that on emotions? Is any of that saying, you know what? Tomorrow, if I wake up and if I feel like making a trade, I'm going to do it. Or tomorrow, if I wake up and the stock is going up in price and I get greedy and feel like I'm missing out, I want to place a trade. No, it's a set of rules. We're going to cover this more and more in the training. But having rules will help you not trade on emotions. That's one of the biggest, hiccups for new people is trading on emotions. A lot of people struggle with that. That's a lot of the questions I get. Well, how can I handle my emotions? Well, how can I, trade in such a way that my emotions don't affect me? And I always say, have a set of rules. Think of our marriage counselor taught us this concept. To think of it this way, if you think about an accident, a car accident, and the paramedics come on the scene, they're always calm. They're not frantic like everybody else. They're calm because they've practiced for one over and over again, and they have a set of rules and things they follow to keep their emotions at bay. You can't get rid of your emotions, but there are things you can do to manage your emotions, and having a set of rules to follow is one of them. All right, so that's it for when to trade. Now we're going to move on to the third question, and that's how to manage risk and profits. Now, the third and probably one of the most important questions you need to ask yourself when you trade is, how do I manage my risk and profits? I think, and a lot of other successful traders will agree, that 90% of success has to do with, managing your profits or managing your trades. What puts people out of business, making money or losing money? Well, it's losing money, but how many business owners only focus on making money? How many people when they want to get into real estate and stocks and options, they only focus on how much you can make? They are attracted to stock trading, option trading, real estate, all because of how much money you can make. They certainly aren't attracted based on how much you can lose. And I can tell you from somebody that's lost money in both areas that you can lose a lot. But they're always attracted by how much you can make. And they really don't focus on how much you can lose. Hence why a lot of people fail. All right. So that's why a lot of 90% of success is focusing on how to manage risk and profits, because it's not making money that's going to put you out of business. If you trade successfully, making money is easy. The hard part is keeping it. And, part of keeping it is one, having an extra strategy. And mainly an extra strategy is, again, based on what I said earlier. It's a set of rules you follow. Always have an extra strategy planned out before. I repeat, before you enter a trade. Okay. I can't tell you how frustrating it is when I get an email from somebody. It's never when they're making money. It's always when they're losing money. This stock is down this much, or I'm in this trade and I'm losing money. What can I do? My answer is always the same. Well, what was your initial plan? What was your initial exit strategy? Because honestly, it's a little bit too late now. I can't help you after the fact. And so people say, well, how can I create an exit strategy when I don't know how to, trade is going to work out? Well, you kind of do. And we're going to get to that, how exactly the different things that can happen. Essentially, you plan for worst case scenario. It's like having insurance. Your exit strategy and your plan is your insurance in case disaster. Okay, the next portion of how to manage risk is money management. Money management, in my opinion, is the true path to riches, not just in option trading, but in any area of life. Here's a money management formula that has created more millionaires than option trading and real estate combined. It's called spending less than you earn and then saving and investing the rest. Spending less than you earn and saving and investing the rest. Now, I'm sure you've heard that before. I'm sure you heard someone say, get out of consumer debt, save 6 to 12 months of living expenses. And I ignored that advice for years. And then, one day I said, I'm just going to be hard-headed enough to try that. I'm going to follow that advice. And when I did follow it, that's when I started having massive success in other areas of life, in other areas of my life, including trading. It's because it needs discipline, it needs patience to follow through with a strategy like that. to discipline yourself to not spend everything you make. It takes a lot of discipline, and that discipline helps me in other areas of my life, like options trading. And so, what I always encourage new traders is like, stock options are the exotic. If you haven't mastered the basics yet, and the basics are spending less than you earn, getting out of consumer debt, different things like that, you're going to struggle with options trading. And it's not because you're not intelligent. It's not because you may not know the strategies. It's because you haven't developed the character traits that will help you succeed as an options trader. And two of the major ones are discipline and patience. And so, the poor money management, I guess habits that a person may have in their other areas of life, it actually shows up in trading. And that's why I struggled so much in the beginning. And that's, also why it took me 1 to 3 years to succeed, while some of my students succeed in like a year, because I can teach them all the things I did wrong. I started with the flawed mindset that I could take my current self and become a success with options. And it's not like that. You will become a better trader when you become a better person. I repeat, you will become a better trader when you become a better person. That, it's abstract, might not make sense to you, but you will find that trading is tough on you. It's a really, really strong look in the mirror. Trading will reveal a lot about yourself. And whether you're greedy, whether you're fearful, whether you have the discipline or patience. A lot of people don't like what they see in the mirror when they trade options or, invest in period. Now, that has nothing to do with money management, but that's my little side rant there. And another example of money management before I let you go is, mainly you're going to learn how to profit on paper first before using real money. I've already covered that. I don't want you to invest any money you can't afford or are not willing to lose. A lot of people be like, I can't afford to lose anything. Well, neither I can't either. But, there is money I'm willing to lose. So, don't invest money, you're not willing to lose, because you will lose money as a trader. And absolutely 100% never invest your entire account on one trade trying to get rich quicker. Now, when you see what you can do here, yes, it's going to be very tempting. You're going to see the power of options trading. You're going to see look at these returns. It's absolutely ridiculous. I made this much in 1 week. Again, you can lose this, but this is a possibility. And when you see this and you're not used to these type of investment returns, it messes you up mentally. I remember that. It really messed my head up. And I just had a hard time trying to be rational. I was just thinking of taking out loans and all kinds of crazy, wacky, irresponsible stuff. But that's what happens. But mainly, I just wanted to, let you know how important this is. It's so important that I'm actually going to cover it more than once. So again, here, I'm just giving you the big picture abstract, kind of walk you through it. And then when we get into trades, I'm actually going to talk about this again. That's how important it is. We're going to cover this at least 2 or 3 times.